Hi, this is Joe Cortright. I'm an economist with City Observatory, and today I'm going to be talking about the outlook for the Oregon economy, how things are changing, and how we should interpret some of the recent economic developments. And I'll be digging into a series of slides that look at major claims that are being made about the Oregon economy and what seems to be the real situation here. So with that, let's just dig into the slides. We'll be looking at the Oregon economy as it stands today in 2026. And let me just start through the slides now. So there are a series of what I would call false negatives, statements that are being made or claims that are being made about the economy that are at best only partially correct and in many cases are factually wrong. And so I'll go through each of these. You may have heard in the news recently a lot of claims about a doom loop, that somehow we're stuck in a bad situation with the Oregon economy. And business groups in particular are talking down the prospects for Oregon's economic future. The Portland Metro Chamber claims that we're in an inflection point. A year ago, they popularized the term doom loop. There's the Governor's Prosperity Council, which says that somehow our regulatory environment and tax structure are driving away business. And the Oregon Business Plan claims that we're facing stagnation and headwinds. It sounds pretty bad. But is it really that bad? Well, there's also the governor pointing to some rankings that came out from the television broadcast network, CNBC, which ranks states on something called business climate. And business climate is a kind of subjective term, perceptual of how some people regard states. And according to CNBC's rankings, Oregon ranks low. And the governor's saying we need to move from 39th to the top 10th. But there are a lot of reasons to believe that business climate claims aren't quite correct, and some of the negativity about the Oregon economy is simply not correct or misinterpreted. Let's dig into that. There are 5 main claims that are being made about the Oregon economy by groups like the Portland Metropolitan Chamber and the people on the Prosperity Council. And they deal with these 5 issues. Population, there's a claim that somehow Oregon's days of effortless domestic growth and our ability to attract talented new residents is somehow over. That we're in real trouble losing jobs, that the Portland area has lost almost 9,000 jobs in the last year. That our exports are declining, and that somehow the decline in employment and exports signals some deeper structural problem with the Oregon economy. They also point to the housing pipeline, and there's no question, multifamily starts have gone down around the region. How should we interpret that? Is that a sign of the apocalypse, or is that part of a business cycle? And then finally, there's a lot of concerns being voiced, both in the popular media and in polling, about the cost of living. And apparently Oregon gets low marks for its housing affordability and a D- from that CNBC ranking. But I think if we take a closer look at each of those 5 issues, we'll find that they're not as dire a situation as being presented, and there's a much more nuanced and factual basis for having a more sanguine view about the Oregon economy. First of all, let's take that claim that population growth is slowing. Clearly, we are dealing with some reality in terms of demographic changes. And we shouldn't be longing for the past. I don't think there's any question that the era of the growth of the baby boom population, which, for example, propelled the Oregon and the United States in the 1950s and 1960s, is sort of over. The baby boomers are moving into retirement. That transition is a reality, but it's not simply an Oregon problem or even a U.S. problem. It's something that's happening to every major developed economy in the world. And in fact, Portland's population trends, when it comes to migration, mirror our major competitors. To be sure, Oregon is somewhat more dependent on international migration, and that's where the Trump administration policies are a big threat. It's because they're cracking down on immigration, and that poses a threat both to the nation but also to Oregon. And recent data that came out just a couple of weeks ago from the Census Bureau shows that immigration is down nationally and in every single metropolitan area. This is not a problem that's particular to Portland. In fact, when we look closely at the census data, you can see that immigration, which peaked in 2024, has declined pretty sharply in 2025 and is expected to decline even further in the future. this is a product of the Trump administration's policies. Now, this is something we should be concerned about nationally, but it's not a particular problem that's being visited on Portland. As you can see from the map on the right, virtually every large metropolitan area in the U.S. is seeing declines in immigration. So it's an important issue, one that we should care about, but it doesn't signal any fundamental flaw with the local economy. The second claim that's made is that Portland is losing jobs, and there has been clearly a decline in employment as reported by the Oregon Employment Department and Bureau of Labor Statistics. And the claim is being made that employment in Portland region continued to contract even as national employment levels increased. Well, if we take a closer look at that, it's clear that Portland's economy is down a bit earlier and more than the national economy, but national growth has been declining very sharply over the last 2 years. Job growth was revised downward to 0.1% last calendar year. Job growth declined by about 90% from about 2 million new jobs in 2024 to fewer than 200,000 new jobs in 2025. So we clearly are in the midst of a significant slowdown. And there are some structural characteristics of Oregon's economy. The fact that we produce a lot of durable goods, which are cyclically sensitive, and that we export a lot means that we are more sensitive to these trends when the economy kind of shifts into reverse or slows down. But really the dominant factor that's had an impact on the Portland economy in the last year or two has been bad years for our two leading employers, Intel and Nike, which have both done really well over the last 20 or 30 years, consistently growing and adding new employees, have had their worst years in decades and collectively have laid off more than 5,000 employees. And you can't blame the situation with the Oregon economy or the Portland economy on something structural in the Oregon economy. It really has a lot to do primarily with those two companies and their recent weak performances. For example, when we look at layoffs, both of these companies have announced layoffs in the last 2 years. Intel's announced about 4,500 layoffs, and Nike has announced about 740 layoffs. And that comes in the wake of very weak sales for Intel in the years 22 and 23, and Nike's stock falling by more than half. Now, in recent days, Intel stock has rebounded. There are good reasons to believe that it will bounce back as the semiconductor industry continues to grow. But the critical point here is the problems of these companies are not necessarily indicative of any fundamental flaw with the health of the Oregon economy. They have to do with the particular competitive position that each of these companies finds themselves in or has found themselves in the last couple of years. We shouldn't interpret their performance as somehow a weakness for the structure of the Oregon economy or the policies that we have. And when you put job growth in Oregon in the context of what's happening nationally, it's apparent that even though national employment barely managed to increase in 2025, there's a very significant downslope in employment. We saw very rapid growth in the wake of the recovery from the COVID recession, but job growth has been tapering off steadily since then and appears to be going negative. And that's nothing new for Oregon. Again, Oregon has an economy that's somewhat more cyclically sensitive than other places. So if you look back at the last half century, Oregon's economy is what economists call pro-cyclical. It moves in the same direction as the business cycle, but it moves somewhat more strongly and sometimes earlier. So you saw in the early 1980s, you saw in the last couple of recessions in 2000 and in 2008, Oregon's economy went into the recession earlier and experienced a higher recession. And it appears that's again what's happening here. That cycle that's affecting the national economy is affecting the Oregon economy. And you can't somehow read into that there's a fundamental flaw with Oregon's policies, or Oregon's business climate. The next indicator that people point to is that our exports are down, and in particular that we've seen a decline over the last couple of years. But it actually turns out that export sales are a very, very volatile data series. They go up and down monthly and quarterly, and you have to look at long-term trends in order to discern what's going on. The big decline in the last few years has been a decline in semiconductor sales, mostly by a single company, Intel. And as we noted earlier, Intel has had a couple of tough years. It's been ramping up a new wafer fab that builds new chips and is hopefully turning around. But again, the decline in exports has everything to do with the fate of one company and not a fundamental problem with Oregon's economy. And the other thing we know is that Trump tariffs are throwing the entire export industry into a disarray. We don't know from week to week, month to month, what the tariffs will be and how policies will affect us. That makes our exports more vulnerable. But to put our exports in context, again, exports are extremely volatile. You can see from the chart on the left that lots of movement from month to month. And there was a particular spike in late 23, 24 that pushed up our exports, and they've fallen since then. But they're basically in the same range that they've been for the last 5 years and most of the last 10 years. And in fact, we had a bigger decline in exports between 2022 and 2023 than we did in the last year. Again, a very volatile series. Don't try to read too much into that. That said, it turns out that Oregon is still one of the strongest exporting states in the United States. Yes, exports will go up and down from year to year, from month to month, but we're still ranked 6th in the nation for exports per capita, which tells you that we have a very positive trade-focused economy. So that's the important context to have there. The next issue that we're told about is somehow that an indicator that we should be worried, signaling something's fundamentally wrong with our economy, is the fact that multifamily housing starts, particularly in the city of Portland and the Portland region, are down, and clearly they are. But that's also has to be put in context. First of all, we're just winding down a big boom in apartment construction nationally, which peaked in about 2022 and is expected to fall by about a third to 40% by 2027. So there's a downdraft in that market. The other thing to know is, and this is a underappreciated, maybe unknown fact, is that rents in the Portland area are down 23% in inflation-adjusted terms over the last 9 years. That's the principal reason why we've seen a decline in multifamily housing starts is rents are down. That's because in the wake of the adoption of the inclusionary zoning requirements in Portland, there was a big surge in apartment construction. There was another bump in construction when there was that apartment boom after 2020. So there have been a lot of new deliveries, a lot of apartments built. That's pushed up the vacancy rate and held down rents. And that's why developers right now are choosing not to build more apartments. Again, it's a cyclical sort of thing. And it's also amplified clearly by higher interest rates. We know that interest rates on the 30-year T-bill have doubled roughly in the last 3 years. That's pushing up the interest rates that builders and others have to pay in order to build new apartments. So the declining rents coupled with higher interest rates are just slowing down the housing market now. It's not something that's indicative of a fundamental problem with the Oregon economy. And the related argument that's made about Oregon is that somehow our cost of living is high, that it's gotten out of hand, that our quote-unquote affordability challenges put us at a competitive disadvantage. Let's dig into that a little bit more deeply. First of all, the important thing to know is that differences in cost of living between states in the United States boil down almost entirely to differences in housing costs. Housing costs more in some markets than in others. And it also is a truism that homes in Oregon and on the West Coast generally have sold for higher values than other homes around the United States. That's always been the case, and has been the case when the economy has been extremely healthy and been growing rapidly. And in part, that higher value that Oregon homes command is indicative of really our higher quality of life. People are willing to pay higher prices for Oregon homes because all of the amenities that they get by living in a state like ours. Same holds true for the rest of the West Coast, for great cities like New York and San Francisco, where people willingly pay high prices to have access to all the benefits of living there. The interesting thing is when we look at the house price premium that Oregon homes get, they sell for about the same premium relative to other houses in the United States that they did 25 years ago, about 40% higher. And as I noted earlier, It's the case now that Portland area rents are much more affordable than they were 9 years ago. Nominal rents, that is, in stated dollars, are about the same, and inflation adjusted rents are down about 23%. It's also the case that we're spending a much smaller fraction of our income in Multnomah County and in Portland on rent than we were in 2017. It's declined by about a third. Let's look at the data on that. First, here are the data on the price premium for houses in Portland compared to the average home in a metropolitan area in the United States. These data come from the Census Bureau and the Case-Shiller-Wise index of home prices. The blue line is the line for Portland home prices, a little over 500,000. The red line is the line for the average home price in metropolitan areas in the U.S., about 350 or 60,000. And what you can see is those green bars show you what the premium is, how much more you pay for a Portland home than for the typical metropolitan home in the United States. And clearly, there was a big run-up in prices in between, say, 2012 and about 2020 or 2021. But since then, the price premium has come down substantially. And today, the price premium in Portland is about 40%. That is, you pay about 40% more for the typical home in Portland as the typical home in a large metropolitan area in the United States. That's virtually exactly the same level of premium that prevailed 25 years ago, and lower than it's been in 10 or 15 years. So if you're worried about high home prices somehow being a disincentive or putting us at a disadvantage, they're clearly much less of a disadvantage than they've been at any time in the last 10 to 15 years, during a time during which when our economy did extremely well. It's also the case when you look at the rental market that Portland is a bargain. And while we're not as cheap as some places around the United States, we tend to be much cheaper than our competitors on the West Coast. In the San Francisco Bay Area, monthly rents are about $1,000 a month more than they are here. In Southern California, they're about $600 a month more than they are in Portland. And even up in Seattle, they're about $300 or more dollars a month higher than they are in Portland. And Portland is roughly competitive with, say, Denver and Sacramento, and a bit more expensive than Minneapolis and Austin. But if you're worried about affordability being an issue, compared to the cities that we usually compete with, we look like a bargain. And that's important to keep in mind. In general, if you aggregate and look at all the sources of cost differential across the United States, which the Bureau of Economic Analysis does in something called regional price parities, right now we're at maybe about a 3% premium to the United States in terms of our total cost of living. That is, buying a representative bundle of goods in the Portland area will cost you about 3% more than in the rest of the country. That's down sharply from what it was 3 or 4 years ago. And it's well within the range that we experienced in the latter half of the teens when we were doing very, very well. And the other thing we have to note is these regional price parities don't reflect the value of local amenities that people get for benefits that people get for living in a particular community like Portland. And people, as we've noted, have traditionally been willing to pay a substantial premium to live in a market like Portland with great quality of life. But that's not all. When you look at our system of regulation and land use planning, it actually means that we are living in a more compact, more walkable, more bikeable community, and places where we don't have to drive as much or drive as far for our daily errands. And we know that that saves residents of our region a huge amount of money compared to the typical large metropolitan area in the United States. It turns out, according to federal data, that the average resident in the Portland metropolitan area drives about 18 miles per person per day. That's about 25% less than the national average for large metropolitan areas. And because of the cost of driving, what that means is that 6 miles a day that we drive, each of us fewer than the typical American, means that we save about $1,000 per person, about $3,000 per typical household in terms of our cost of living. And so if you look at the total package in Oregon and in Portland, where the costs are roughly comparable, maybe 3% higher, we more than make that up from the advantages of living in this place in terms of quality of life and things like not having to drive as far because we don't have the sprawling development patterns that you find in other places. So to summarize, 5 big issues to worry about for the Oregon economy, but maybe not to worry so much. Clearly, population trends are changing. The baby boom is aging. We're not going to see as rapid growth as we've seen in the past. And Oregon and the U.S. need to adapt to demographic transition just as every other developed country in the world is doing. It's not a cause for lamentation. It's something that we need to deal with. Second is employment. Yes, Oregon's employment is preceding the nation into a recession, but that has largely to do with bad years for 2 of our largest employers and the structural fact that Oregon's economy is procyclical. It always tends to lead the nation into recessions and tend to experience recessions more. That's nothing new. Exports, the export data, we shouldn't read too much into month-to-month changes. Exports are volatile. They've gone up and down, but that doesn't mean our economy is getting weaker. Oregon still ranks 6th nationally in per capita in exports. When we look at the housing pipeline, again, housing is a very cyclical business. The slowdown that we're seeing in housing right now reflects a lot of building that we've done over the last decade or so, and the fact that rents have declined and interest rates are up. There's no reason to believe that when we get into a more favorable environment for housing, particularly when interest rates come down, that Oregon couldn't add just as much housing as we have in the past relative to the nation. Finally, when we look at cost of living, housing costs are about back to their long-term average. There is a premium that you pay to live here, but it's no higher now than it was 20, 25 years ago, and we get all the advantages of living in Oregon, including this green dividend, which by enabling us to drive less, saves the average household in the Portland area $3,000. So while there's some alarmism around some of these trends, a closer look at the individual data behind them shows that this is no cause for fundamental alarm. That doesn't mean there won't be a recession, doesn't mean there won't be hard times in the next few months, but this is really a product of what's going on nationally and not some recent deterioration in Oregon or failure of Oregon's economic policies. So thanks very much for watching this and for listening to these slides. You can learn more at City Observatory, www.cityobservatory.org. Thanks.